Hey all, hope you're doing fine. Today I want to talk to you about Editas. It's been a while since we took a closer look at Editas and I thought today would be the time to do so. Let's get started. Recently, Editas released its Q1 2022 earnings, and in my opinion, I think they surprised the market in a positive manner by exceeding expectations on both EPS as well as revenue. In terms of EPS, they did a 74-cent loss per share against an expected 81-cent loss per share. So they lost less than they would have as per market expectations. And also they had a higher revenue than expected. They came in with a revenue of $6.8 million as against an expectation of $4.7 million. So overall on both those departments, they were able to do better. However, it should be noted that Editas lost almost 50.5 million in Q1 2022. So that is always the concern of the company running out of money. So people who have been going through the first quarter earnings of Editas have noted efforts on part of the company to control its spending and try to retain a longer cash runway, but it's still losing money, as you have seen. And Editas said that it had 566.4 million in cash as of March 31 compared to 619.9 million in the same time prior quarter. So that is a bit of revenue going away, but it's definitely being invested on good work, because if you look at Editas pipeline and check out their list of candidates, it's pretty big as compared to other companies in the same arena. So it's natural for Editas to burn through its money, but it said that it has enough cash to fund operating expenses all the way into early 2024, and I think I mentioned that in my last video that I did on Editas. But without any marketed products, it seems highly unlikely that the company will have any option other than to sell more stocks to raise money, thereby diluting its shares. And that's the reason why recently Editas stock fell sharply. More so because if you look at the progress in its pipeline, many investors are concerned about Edit 101. I was personally very excited about Edit 101 when it entered the clinical trial stage, because Edit 101 was targeting a disease related to eyes. It was, I think, LCA 10, if I'm not mistaken. That's what was being targeted. And if the therapy had succeeded, if it had proceeded at the same pace that it had in the past, we would have had some approvals in place or a BLA. And that would have meant that Editas would have therapy in a field which is not at all crowded. It will be the only player out there. But there has been no progress as such that is visible to outsiders on what's happening with Edit 101. So at this stage, I think if the management were to make some communication about some progress about Edit 101, it would definitely calm the nerves of the investors and also potentially help the share price. So I'm more concerned also because in a way I have mixed feelings about this. I'm a bit concerned that Edit 301, which is targeting beta thalassemia and SCD, has come in from behind and overtaken Edit 101. And if Edit 301 succeeds, then it will be in a crowded field, because there's a lot of companies which have got therapies in clinical trial stage for sickle cell disease and beta thalassemia. The names that come to mind are CRISPR Therapeutics and Beam and a few others. So that's the situation as far as Editas is concerned. One of the good news is that recently Edit 301 received orphan drug status and they're going into clinical trials. That's what is a little exciting news for Editas at this point of time. And one of the other things that is good for Editas is the fact that they have the CRISPR IP license from Broad Institute. So the danger of their IP being defective is not there. However, we still have to expect the verdict from the federal court for CVC. And if it still continues to be in the favor of Broad Institute, Editas is going to be laughing. It's going to be in a good situation. And if on top of it, if Edit 301 makes headway, then probably they will be the first of the block for sickle cell disease and as well as beta thalassemia. And that would be a big victory. So those are the possibilities for Editas. Now I'd like to go and have a quick look at their pipeline. As you can see in this pipeline, Edit 101 is the most is the one that has progressed the most, and it's in clinical trial. And if you look at Edit 301, it's treating both sickle cell disease as well as TDT, but the orphan drug status has been given for TDT, and we'll have to see how the designation for SCD proceeds. That's the best of my understanding from what I have read in the press release. As I mentioned before, this is a huge pipeline, and therefore the cash burn is going to be high. In order for the company to have a long runway, there is a potential that some of these candidates might not be progressed until there is more cash, and the more promising candidates will be worked upon so that they can be taken to the finish line. So that's a possibility that can happen. So some of the items in this pipeline chart might probably stay static for a longer period of time than it would have otherwise if everything was moving fine. But also you will notice that there are a lot of collaborations out here. If you look at this particular candidate out here in cellular therapy medicines for oncology, alpha, beta, and T cells, it is Bristol Myers Squibb is a partner out here, and there are payments that will be made by Bristol Myers to Editas. That's going to be a source of fund as the milestones are met. So if there is a tightening process, this particular candidate will not be in the tightening. There's another one, a collaboration with Blue Rock, Edit 202, multiplexed INK for solid tumors, natural killer cells. And this again, if there's revenue payment arrangement between Blue Rock and Edit 202, this will also likely proceed. Another candidate that will definitely proceed is Edit 101 and Edit 301. Now the company will have to make a choice among the others, which one should be held back and which one should be progressed. So they will probably have to make that decision, or they will have to issue extra equity shares and dilute the equity. So those are the possibilities I see. And if you look at this slide from their presentation for Q1 2022, you will notice that they have given a sequence of progression for Edit 101 towards getting its BLA. And the first one, second one, and the third one are all in orange, showing that they have been completed. But you have 4 and 5, of which 4 is ongoing. It's for a pediatric trial. The first 3 were adult, and 5th is also pediatric. So we'll have to wait and see what happens out here. There are no dates mentioned in any of these items out here, so we don't know the time frame we are looking at. And Edit 101 objectives in 2022 consists of completing dosing of pediatric mid-dose cohort, 1H 2022, the first half of 2022, that is this one, number 4. Initiate dosing pediatric high-dose cohort, expand patient enrollment in 1 or more previously completed adult cohorts. So they'll go back to expanding patient enrollment for number 3, I would assume. Provide Brilliance trial safety and efficacy update in 2H 22. That's the second half of 2022. We don't see Edit 101 getting any FDA approval as such. The target itself is to provide efficacy update in second half. So any approvals from FDA will come probably after the second half of 2022. If second half of 2022 means maybe July or August, then we have a good opportunity for FDA to come back and give us some good news. At least that's my opinion based on my understanding of the FDA approval process and the time frames involved. Now this is a subsequent slide in their Q1 2022 presentation, and you can see in this slide that they are talking only about Edit 101, 301 and 202 as part of 2022 objectives, which probably means that the other programs are going to get less priority in terms of funding, and the focus of all the funding and spending is going to be on Edit 101, Edit 301 and 202. So we don't have to guess anymore. that's what it's going to be. One thing I'm excited about is the recent announcement by Editas of their Sleek gene editing toolkit. Sleek is basically selection by essential gene exon knock-in, so it's an acronym. I do not understand the mechanics because I'm not a biochemist or a biologist or anything. So my understanding from reading this paragraph is that Sleek is a new toolkit that has been designed. It consists of AsCas12a nuclease, and it enables high efficiency multi-transgene knock-in of induced pluripotent stem cells, T cells, and natural killer cells while ensuring robust transgene expression. So my understanding is that this is a much more efficient and more precise gene editing tool, and it's also potentially an improvement over the current CRISPR-Cas9 methods that we have. Now we are in the website of companiesmarketcap.com, and I had to put a search out here for largest genomic companies by market cap to see where Editas stands among them. And what we have here is a list of 27 companies with a total market cap of 86.88 billion. That shows us that how small the size of genomics business is as compared to the rest of the market. This is also one more reason why we got to make sure that we focus not only on genomics but also adjacent technologies, so that we can have a larger market cap choice to make and therefore diversify our risk a little bit. Now coming back to this chart, Illumina is on the very top, followed by CRISPR Therapeutics at number 5, Ginkgo Bioworks number 4, that is DNA, and then you have got Intellia at number 7, Beam at number 8, and Editas is at number 15. Editas is being number 15 with only 0.80 billion market cap. So that's the status of Editas Medicine among its peers. Now let's take a look at the chart for Intellia. Now we have here a chart which has got each candle as a one-day candle. I'm going to zoom out just to get a perspective of where we are and what is happening with this particular share. So I've zoomed out to almost a 1 year period. What we have here is February 2016. So we have started from the very beginning, 4th February 2016, and all the way up to the current time. So you can notice that when Editas was launched and it got into the stock market, it was at 13.05, and today we are at 11.68. So one can argue that Editas has done a lot of cash burn in the process, and therefore it's valued less than what it was when it launched. But on the other side, the cash burn has also resulted in intellectual property progress of at least Edit 101 and 301 all the way to clinical trials. So those things cannot be discounted either. And also the sleep technology that has been announced by Editas, that also has got to add some value. So I think that the market has undervalued Editas at this point of time, rightly so, because we are in a macro environment which is very risk off. And if you look at the chart out here, we can see that we were earlier in a bear channel, then we consolidated, got out of the bear channel, tried to move up, but then we fell back again. And now we are in a parallel bear channel moving the way down. Now if we zoom in further and go closer to where the action is, there is some mini consolidation happening out here all the way from 13th of May. We have been moving range bound, and our 20-day exponential moving average is still a resistance for us, whereas the 9-day exponential moving average, which was a resistance for us until Thursday, was overcome on Friday, and we now have the 9-day exponential moving average performing a supporting role. If we look at our charts, indicators out here, the MACD has turned bullish. Momentum is still below average and picking up. I like momentum to be above average. Then it feels that it can definitely influence MACD. So momentum has to continue picking up so that the MACD remains green and bullish. And in that case, the price is likely to go up further. I'm going to look at the trend lines that we have here for resistance and try to plot some new lines that can give us some further understanding, or at least lay the foundation of where we are. So I'd have a support line out here which from which we have bounced twice. And yeah, that's about all I have got to say about the charts out here right now. One more thing we can measure is how much have we fallen from the peak. At one point of time, we were somewhere close to $100, and right now we have fallen down 89%, almost 90%. So that's a steep fall for Editas. So when the recovery starts, Editas is likely to move pretty fast, and hopefully we are very close to that. What I'm expecting forward in future, in the near future, for the next 2 or 3 weeks, is some kind of consolidation between these two ranges. That is between 9.85 and 15.37. I would like to further narrow this down, and I would stick my neck out and say that our price range is going to be between 13.14 and 9.65 for the next 2 or 3 weeks. We'll be consolidating between these. In between, if we find any good news, then the markets will go up, and so will Editas. Otherwise, there's going to be a bit of consolidation. People buying, thinking that it's reached a bottom, and then selling because they're afraid that it may fall and they want to lock in their profits. That's how those moments take place. We'll see what happens when the market opens. But this is it from me with regard to the technical analysis for this talk. So that's all I have, my friends, about Editas today. I hope you enjoyed the video. If you did, please press a like. If you have not yet subscribed, please subscribe and become part of our CRISPR family and help us grow this channel. Thanks and have a great day.